As Barco from Overcome Mortgages, we're going to have a look at key mortgage terms for first time buyers. So, as a mortgage broker, this is something I help people with. So, let's get into it. Buying a house can feel daunting, especially when it's your first time. So, what makes it even harder is the amount of jargon and terminology used throughout the mortgage process and the journey to buying your new home. So if you're looking to step onto the property ladder and want a simple guide to the phrases and terms you'll see, here's a helpful overview. So the first would be an agreement in principle, also called a decision in principle. So this is a statement from a lender confirming they would be willing to lend you a set amount of money. It's useful early in the home buying process because it shows estate agents and sellers that you are a serious buyer. So a mortgage broker can help you secure one. An arrangement fee is a charge from a lender for setting up the mortgage. So depending on the lender and the product, it can be paid up front or added to the mortgage balance. A conveyancer is a legal professional who manages property transactions and handles the transfer of ownership. Your debt to income ratio shows how much of your monthly income goes towards debt payments, such as car finance, credit cards, or personal loans. So lenders use this to assess affordability. An early repayment charge is a penalty for paying off your mortgage too early or overpaying beyond your lender's allowed limit. So these charges vary and often reduce as the mortgage term progresses. An energy performance certificate, it's an EPC, rates a property's energy efficiency from A to G. So some lenders require a minimum rating and some offer incentives or better rates for higher rated homes known as green mortgages. So a fixed rate mortgage means your interest rate and monthly payments stay the same for a set period, usually 2 or 5 years. So many people like fixed rates because they offer predictable payments. A freehold means you own the property and the land it's built on. This is different from leasehold, where you own a property for a set number of years, but not the land itself. A joint borrower sole proprietor mortgage allows multiple people to apply for the loan. So that's usually family members, but only one person owns the actual property. Loan to value is the percentage of the property's value that you borrow. So a lower loan to value often means better interest rates because the lender sees it as a lower risk loan. A broker can help you understand your loan to value and ways to improve it. A mortgage offer is a formal document confirming that the lender has approved your application. It includes the loan amount, interest rate, repayment details, and any conditions. It's usually valid for 3 to 6 months. Overpayment means paying more than your normal monthly mortgage repayment. So this can reduce your mortgage term or save interest, but paying too much too soon may trigger penalties. So always check your lender's limits. A repayment mortgage is where your monthly payments cover both the capital you borrowed and the interest. So this is different from an interest-only mortgage, but only the interest is paid and the capital is repaid at the end. Stamp duty land tax is the tax paid when buying a property or land. So what you pay depends on the property's value, location, and where it is your first home. So rules differ in Scotland and Wales, so it's important to check with your advisor. The standard variable rate is the interest rate you move onto after your initial deal ends. So it can change at any time and is often higher than rates available for switching to a new deal. A tracker rate follows the Bank of England base rate. This means your payments can go up or down depending on changes to the base rate. A valuation fee is charged by lenders to check the property's value ensure it provides sufficient security for the mortgage. So if you're unsure about any jargon during the process, we explain everything clearly and guide you every step of the way towards buying your first home. You can book an appointment today or reach out via our contact details on our website. And remember, your home may be repossessed if you do not keep up repayments on your mortgage. The content for this video was approved by the Openwork Partnership on the 24th of March 2025.